Well, good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, the 15th of July, 2021. And we're right now about 5:40 p.m., and that is Central Time. I'm taking my summer break. I'll be going 5 days this coming week. I won't be putting out updates on Friday because I'm getting ready to leave now. I'll be leaving after the close. And this will be your last update from me until a week from Monday. Got that? And then I'll be back and refreshed. But I like to go away. I go up into the woods of Montana. If you've ever been there, it's phenomenal. You can be warm in the prairie land, and then you're in the mountains, and you can go into the snow. It's just fabulous. And I'm right by the glaciers. Very, very cool place to go. Okay, I am concerned with a bunch of things. Number one, the market's been, for the past 2 weeks, fighting with the idea lower interest rates, scary for the stock market. We've seen that happening. Then the market comes roaring back for a new high, except the Russell. But the other indices have done a very good job of that. But why is that occurring? Why is the dollar going up as interest rates are falling and continue to fall? They're stable tonight, but they were down again. You know, we're under the 130 level in the bonds. What is the story that that's trying to tell us? Another level of inflation that I think is coming out of the marketplace is in oil. You know, you're going to have a deal here where the United Arab Emirates is going to be able to produce another 430,000 barrels a day come April. That's not far away. And if OPEC gets together and has a virtual meeting and agrees to the deal, then they can start producing the 400,000 barrels more a day. So you've got oil coming at you, and yet we have all this COVID situation. We've already seen economies try to come out of the pandemic. You saw China, and China's numbers today were growth again. I think they were happy with it. I think I was happy with it, and the copper market surely liked it. It's back into the 430s, even though it's down a little bit tonight. It's the lower interest rates, and as the Fed chair said today, and he said it yesterday, there's a lot of unknowns here. He does think inflation is transitory. There's people betting against him, think that he's not right and not right at all on that. They go to everything they see in a grocery store, and I get it. But if you also get my newsletter, which many of you don't, but it's in my full research, I talked today about pork prices. And China, who is the world's largest importer, just put on notice, and I use the word just, it's just occurring, that they intend on cutting back exports probably imports to them from the U.S. and other people by as much as 50% between July and December. Their prices domestically, what did they do? They went down 50% since the beginning of the year. U.S. prices went as high as 25% higher. You see the chart that I give you there, and this is from their ministry. It comes in, why do they have to buy? So I can see that argument. Well, that argument's going to mean what? Well, it's still good for the corn market because they didn't say that they're not expanding. They're expanding their herds. We know they don't grow enough of that. They just don't need that element. Well, that helps us. Go price out spare ribs. You'll see how expensive they got. I know that firsthand. So I look at that all the time. It's the different things I look at. That's the point I'm making. When we look at the S&P for a change, going into Friday, it's actually for the week slightly lower. And if you look at the chart here, well, we're getting a roll factor happening. That doesn't mean it's bearish. You do have higher lows, higher highs. However, the 18-day average is the support, and from where you're at now, that's some 32 points lower. That's far away. The Bollinger Band was only hit back here. We didn't get up to it again. You did hit window envelopes. And if you've taken my charting course and you have my research, you know that. And we were talking about what to do when you were hitting the window envelopes there, and I feel good about that. And I'm really nervous now. You're losing by a lot the embedded reading. That doesn't mean with a good gain tomorrow back up towards these highs that you can't get it again. The question is, you're on the defensive suddenly. We haven't seen that in a while. You haven't been on the defensive since late June. So to me, the bells are warning. all be careful. I'm not going to be here to guide you, so you decide what you're going to do. It might be prudent for people to step out of the market temporarily. Why? The NASDAQ is doing the same darn thing, and it's losing it by even more. So if these markets drop, they're targeting the 18-day average of closes. In the bigger picture, that's not bearish. But in the short-term picture, it is. So you have to decide which picture you like in there. The Dow is the one that's the strongest here. It is holding on, doing a very good job of it. That's the one I'm most secure with right now until that loses its embedded reading, and the target is still 35,134. Here's the real weakling. It hasn't shown any sign of coming back. It's now going into that gorilla glue trade that I call. It's when a market locks in on the lower Bollinger Band and just basically sits on it. At the same time, the momentum's pointing down. It is oversold. The market's, in my opinion, the way I teach charting, never a sale against the Bollinger Band, but it's certainly not a buy. It's a sign this market's just got a lot of power against it. In the VIX cash, you made a run today as high as 1809, just missed the upper Bollinger Band, came back on today against the 18-day average. You're not trending. You're going very much sideways here. Is that a base? Is it a top? Or is it just we're going to be losing volatility in this environment, and that's what the market's going to do? That's what I think it is, the last one. In the 30-year bond, overbought, in an uptrend, Bollinger Band should be very solid resistance in the market. Same thing in the 10-year note, trend up, looking for that. You're already at window envelopes, so you've got to pay attention to them. If you don't know what they are, subscribe to my service and take the charting course. You'll learn it very quickly. They're a standard deviation from the 18-day average, but the way I teach them and put them out on the charts, I think you'll see something different. In the dollar index, the trend is up, but you're overbought. Now, interest rates falling. That's normally bearish, the dollar. All things equal, unless, because our interest rates are falling, it gives, if you will, the Eurozone, they go, oh, we're not going to raise our rates. Japan has their monetary policy tonight. Oh, no, we're not going to raise our rates. And if you get into that, all things equal, if the dollar falls, does it really hurt the dollar? Got it? Because nobody else is making a move. In the eurocurrency, you're still very much in a downtrend and terribly oversold. Difficult time to be trading currencies. The first one to tell you that. British pound, well, if you get under 138.01, you break the uptrend. You tried to do that today. If you take a look, you got to 138.06, and suddenly you're back to 138, as you can see, 33. So the trend is still up. The bias turned down because you're under the 18-day average. Momentum still pointing to the upside. Bitcoin is still bearish, but take a look. It's making a run at the lower Bollinger Band. Today's low, 30,970. Bollinger Band, 31,000 and $1. You hit it, and you're bouncing away from it. Exactly what I teach you in my charting course, especially the enhanced Bollinger Band course. Go to the website. You'll find it there under education. Then we get to the Brent versus the WTI oil. And as you can see, it favors, whenever you're over the 18-day average, that means it favors the Brent at this point. But this market is now gone from upper band to lower band to upper band to lower band. It's impossible. Don't even try. In order to catch these trades, you have to trade the wrong way. You have to pick a top to sell and pick a bottom to buy. You're just picking. You're not going with a trend. And this is a market that's doing that. When did the top come out of it? I've been telling you that. I told you that a week ago. I said there is no way that the Saudis can't give the UAE something. I then printed in my newsletter how many countries OPEC is allowed to overproduce. And there's such a beautiful case from the UAE, how they get money from abroad to build their infrastructure and what they've done. Well, that's what they did. I mean, just logic at the end of the day works. But that's more oil supply coming on. And it doesn't help that the headlines in America, COVID cases growing. It doesn't help energy prices. Melbourne goes into a lockdown again. Another case found at the Olympics. I can go on and on. So there's a point where these markets, you got to